Tolo, and I'm about to give you a summary of the book Banking 4.0, Banking Everywhere, Never in a Bank. Actually, what the book really tries to portray is that banking is no longer something you you do, rather somewhere you do. I know grammatically it doesn't make sense, but banking is mostly nowadays banking is just receiving revenue from many places at the same time, and how you're able whatever you're able to do digitally with those with that revenue, um, and also being able to readily send it to wherever you need to do and do remittances and transactions of that nature. That's what banking is, and that's what I got from this book. It is written by Brett King. You can find him at brettking.com, and published by Wiley, of course. It's a very great book on banking. Without further ado, I'm going to get started with the first chapter. And I have my notes here with me. I'm not going to go through the book. I'm going to start right ahead with the first bullet, which is most banks add technology on top of traditional banking models because the products and processes are identical, retrofitted for digital, right? Maybe you might not understand what I wrote there because it's in my notes, but what they're basically just saying is that banking, traditional banking, like right now, what most banks are doing, most traditional banks are doing, they're just augmenting their products with digital features, and actually just not changing their business model, but really just um, adding to it using technology. For instance, back in the day, FX was used for escrow services amongst customers to say, okay, the payment has been done, but indeed, is the quality okay? And then, of course, whoever is the middleman there, us doing the quality assurance, will have to send the bank a fax. But now all of that is automated using QR code. So that's what really most traditional banks are doing now. They're not changing their model, they're just working with it. The processes are still the same, but they're just adding technology into the process, which is not a bad thing. And then again, today, at least 40% of Kenya's GDP runs through the rails of their mobile money service called M-Pesa. And this is interesting because I just got to understand a lot about how M-Pesa started. M-Pesa in Kenya, if you don't know anything about them, they are the biggest bank, if you want to call it a bank, but of course now they are classified as a bank. And initially when they started out as a telecommunications and mobile money services. So they broadened on the lines of finance and technology, and finally they got to a point where they became a very prominent force to which most banks started to actually see them as a threat, and growing up, and they started to get much of the consumer population and the unbanked population in Kenya as their customers, and they revolutionized the Kenyan banking system, in fact the African banking system, Southern African. And indeed, nobody was banked in those days. It was such a privilege for the few. And M-Pesa came along and taught the very traditional banks how to do banking. And this was exemplary. And also, much of the banks also started to pivot their business models to start to work with M-Pesa. And that's why now M-Pesa doesn't really compete with them. It just includes them in their transactions, in their B2B transactions and all of those things. So that is M-Pesa, and it has at least 40% of Kenya's GDP runs across their mobile money service, which is quite a significant amount because if you think about it, it just means that The rest of the traditional banks, the big five banks in Kenya, wherever bank that really existed before M-Pesa, now only shares 60% of the GDP across them. And who knows how much this 60% is, because M-Pesa is the bank that revolutionized banking in Kenya. So it could very well be that all of these banks together could not really come close to what M-Pesa is transacting on an hourly basis. Um, so another thing they're saying, M-Pesa has 22 million customers. When this book was written, it had like 22 million customers actively on their mobile customer base, um, 22 to 26, right? And if you take the population of Kenya as 45 million adults, right? You can see that M-Pesa actually has more than 50% of the customer base in Kenya. Hence the 40% GDP, right? Transactions being processed. So M-Pesa is quite a big player that started out as a telecom company and became a bank. So one thing about M-Pesa is that it's very I looked at it as a very humble service. I mean, I'm here in South Africa. M-Pesa is not as big, but throughout Southern Africa, throughout actually the entire Africa, M-Pesa is quite a significant bank that really does comply with most regulations in most countries. And I know from South Africa, Vodacom did attempt to bring M-Pesa and had failed in their endeavor because I believe also Vodacom had a lot of reprimand from the big banks in South Africa because wherever M-Pesa goes, it really takes over. So Vodacom having partners in these large banks, it must not have been an impressive move for them. And also, again, I'm thinking that down here locally, we have quite a M-Pesa would have done so well, but the way they were promoting the business model of M-Pesa was usually for business transactions and things like that. And usually it would really work if M-Pesa was positioned as a product that would create a service for unbanked in rural and township communities and economies, because already in our townships most of the tuck shops are foreign owned, and these foreign owned tuck shops are actually banking with M-Pesa behind the scenes. So most of these banks, that big five banks, are just used as merchant accounts that are going to hold funds until they have to be transferred to M-Pesa and through the rest of their African banks. So M-Pesa still works with a lot of, maybe less than 5%, but here in South Africa, there is quite a lot of M-Pesa transactions happening. So I know that M-Pesa has 200,000 agents and distributors across Kenya now. Not so in South Africa, not so in a few other countries, but each M-Pesa user, you can just say, is also an M-Pesa agent, because once I'm using M-Pesa and I tell you, please wire me money, you have already instantly become a convert of M-Pesa. So on average, the central bank estimates that the average Kenyan saves 20% more today than the days prior to mobile money, right? So that gives you an idea that M-Pesa has actually made banking so accessible to people who actually weren't able to save, making money a priority to most of us who actually didn't have banks, who hid money under the mattress. And in the case of a fire, in case of anything, really, there goes your net worth, right? M-Pesa actually did um, give exclusive banking to the average, person who lives in, government housing and things like that. Pesa was very, very much not welcomed by the big banks, but by the people who actually were just vendors down the road and everybody who's just trying to run a business, the hustlers. M-Pesa became quite a popular choice for them. And therefore, the masses will always outweigh the exclusive few. Not knowing if I'm making a sense, but yeah, that's how I feel about M-Pesa. And that's how they come across all the time. If you look at their advertising, you're going to find M-Pesa has this, they really understand their market. They really understand who they're selling their things to, their product, their services to. And they're selling their services not to exclusive people who need escrow services and things like that, not to, real estate investors. No, they know that they're dealing with the unbanked population, which is down at the grassroots level of most transactions, which is where most transactions happen anyway. So, another interesting fact is that research by Standard Bank in 2015 showed that 70% of the so called unbanked people would have to spend more than an entire month's salary just on transportation to physically get to a branch based banking, and was actually guaranteeing financial exclusion for these individuals, right? There we go again, financial exclusion, right? It's what's been happening with most of these large banks. Here in South Africa, ABSA or Barclays was one of the banks that were charged with financial exclusion because they wouldn't ever allow a black person, no matter how qualifying you are, no matter how much you pay back your loans, credit on housing or anything of that nature, they would really award loans um, more towards the fairer skinned people than the darker skinned people, and that was how they conducted business for the longest time. I believe that they have changed. I believe everything is slightly, but it is what they were accused of, and it's allegations, and I can't say it's who they are, but I do know that much of the larger banks are really not interested in offering the exclusive services in their banks to the average Joe without a cost that's gonna leave them financially in trouble, right? Because I mean, much of their transaction fees and all of these are quite exorbitant and are only affordable by quite a few. And hence, M-Pesa and all these other banks that are coming in the picture that comply with regulation are so much of a breeze for most people who really don't want to go through the conventional banking way. So, the introduction of mobile money accounts has also had a profound effect on the banking system. The big banks that once plotted to kill M-Pesa have found incredible opportunities for expanding their horizon, right? There we go again. Big banks really do not appreciate competition at their level because when you start to poach customers, I mean, firstly, it's going to start with the customers that are really in need of that service, and then it's going to come at the customers that really see those extra pennies that are being um, cutting those extra pennies that come as transaction charges in the huge conventional banks as a great ledger for them, and so they tend to cross flow towards these um, fintech banks, if you will, and non-banks as well. And yeah, that's usually what is happening. They don't really appreciate that competition unless they confront it in ways that would not be, if we say morally, you know, uh, uh, morally advisable, if I could say, but yes, morally, it doesn't really seem like the right thing to do. Um, Customer goals, right? Coming to customer goals, right? Um, M-Pesa had an initial 7,000 customers. I think this one is my personal note, but M-Pesa had initially 7,000 customers, 7 million customers as their first target. And moving on from there, they doubled their customers on that first year alone, making them really confident that they're going to be able to capture the market. And that was a really good cherry on top for them. And that is a very inspirational story in itself. Now, this one is the most mind blowing fact that I have come to discover through the reading of this book. So, apparently, the transaction volume of Chinese mobile payments, that is Alipay, WeChat, all of these fintechs that are providing mobile payments, the transaction volume reached 10 trillion Chinese yuan, right? Which is like US dollar 1.4 trillion, right? Which is a lot, which is so crazy, so outrageous, right? The most the US has ever been able to do was 10 billion, right? The Chinese has done what was around, yeah, I think it's 200 billion now. But during the writing of this book, it must have been 10 billion and so going on upwards. And in 2015, this is 2015, and now they've reached 112 trillion from whatever this book was able to actually record, which is up until 2017, and it was 112 trillion yuan, which was 17 trillion US dollars. And that is crazy. It is so crazy because if you think about it, here in South Africa, mobile money is basically what everybody uses. But because of the Chinese population, I think that's why we, they are able to outdo so many competitors when it comes to transactions and things like that. Of course, there's a lot of activity. There's a lot of high income earners in China again, and most of the world's millionaires are in China. So you can imagine how many transactions go through China. And you think about Alipay, Alibaba's payment escrow product that they offer to everybody, that started as an escrow product, now is the biggest payment network in the world. That is just mind blowing how the Chinese are taking over banking. And one person said banking is gonna be a Chinese thing in the future, and all the major banks are gonna be Chinese. And I will just show you in a minute how what I mean by that. But going to the next bullet, um, the world's largest payment network, Alipay, the one I'm talking about, is handling a huge portion of their traffic, making it the world's largest payment network by a wide margin. And when you say wide margin, we mean PayPal throughout its ages of operating, and all of these have not reached the quantity of transactions that have happened. This is a very exciting era for the Chinese fintech space, and everybody who's a partner in there. So when Alipay was created, that was Jack Ma. Just put it in quotes. Jack Ma was saying, I quote, "When Alipay was created, we hope to create an equal environment in China so that everyone can have equal access to financial support. We hope to see that every honest person, every good person, even though penniless, can create sufficient wealth and value for one's honesty and virtues," right? Yeah, sounds like classic Jack Ma. Those are the kind of things he says. He's never been off. He's never said anything off. He's always been about the people there, and yeah, we respect him for that. So this is basically the. I'm just gonna go back to the book just to try and give you. Um, yeah, it must be down here. Up there. So yeah, this is okay. This is to show you the hierarchy of banks in the world right now, and the amount of transactions that they lead by um, throughout actually the globe. Actually, this is like all your world's biggest banks. Your J.P. Morgan Chase, your Bank of China, your Bank of America, Agriculture Bank of China. If you can look at all this, Wells Fargo, very few of these are United States banks, right? And with the UK still battling the Brexit situation, I do understand why the UK banks are not really uh, well represented here in the world 10 major banks. Um, we have most of these are Chinese banks. This is one, two, three, four. I think around 50% are all Chinese banks, 40%, and the rest are United States and Japan and UK. So you can really see how China is actually taking over most of the market. And there comes my electricity, and that concludes the end of chapter one. And we'll go to chapter two very soon. This is part one. Thank you.